Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Monday. It's November the 12th, 2012. We'll be looking at the S&P 500 large cap index today, as well as probably the VIX. We'll look at those two opportunities there. You'll notice on all my U.S. market charts, if you've been to the free website at PerfectStockAlert.com, we keep all these charts there for you guys to analyze every single day. They're updated with my notations on them, advancing my stop loss limits, marking the charts whenever I see an opportunity to go short or long, vice versa. So you can check them out whenever you like. I'll show you that in a minute. Right now, the main thing I want to talk about is what we're seeing in the U.S. markets, and that is the fact that we had activity today that did not break to the upside. In order to break to the upside, you have to take out the previous high. We didn't do that. We did get a series of higher lows here and here from one candlestick to the next, and we have this little uptrend right there from those two candlesticks, and then you have lower highs. So you've got this point here and this point here lower. This is basically just moving sideways here, and this can break in any direction. It could break to the upside, it could break to the downside, it can continue to move sideways for a little bit before it actually breaks in one direction or the other, but it will eventually break. The thing that I want you to know about this situation here is I did not advance my stop loss limit. Right here, I kept it where it was. The reason for that is that we could break to the downside. And so at that point, I want to advance my stop to the downside. But if we continue to just move sideways, I don't want to be stopped out just yet. Again, we could continue to break down and continue to move lower. So I'm leaving my stops where they're at as of today on the U.S. market charts there. I'll check out the European charts as well, but I don't see any change there. I don't anticipate any change in my scenario this early in the week. Right now, just keep an eye on it, and I want to bring to your attention that you could, in fact, break to the downside. And I'll show you another way you can spot that. Remember that the S&P and the VIX are on the inverse of one another. So let's go look at the VIX now. Okay, here we are looking at the VIX, the volatility index. You'll see we had a major move to the downside on the VIX, losing 10% there for the day. Compared to the close of Friday, and yet we didn't see that reflected in the actual activity of the S&P 500. Remember, a day can, doesn't necessarily mean that when the VIX falls, the S&P is going to rise that, same amount that same day. What I'm looking at when I talk about the fact that you have they're conflicting signals. They basically have a scenario where you have the VIX is going to run the inverse of the S&P, so you've got this move to the upside going on here, and you had the same time period move to the downside going on in the S&P 500. So the VIX is in an uptrend and the S&P is in a downtrend, and that makes sense. What we have here, though, we talked about before, and we've seen it before. Let me gather the tools again. You can see we had this massive close here and then a big gap here moving to the upside, leaving this gap right there that we talked about. And whenever you have this scenario, you expect it to fill, and that's what exactly happened here. We get this nice little pullback here. While we were pulling back, we formed another gap, and this gap was from this close here to the previous open the following day here. And I told you in that time period, you pull back to the 50-period moving average. It's a buy opportunity because you have that gap above you, and you are in an uptrend, and therefore, whenever you're in an uptrend, you want to use a pullback to the 50-period moving average, this red line right here, as your best entry opportunities. At or below that line is great, especially when you have a situation where you've got a gap above you or something like that. And now, as of today, you can see that we have the same scenario set up all over again. So what I'd be looking for here on the VIX is an opportunity to go long, assuming, for example, maybe tomorrow to fall a little further, form a nice little hammer candlestick formation, looks like this. That would be something I'd be looking to go long on with a tight stop and looking for a gap fill up here. So look for a test of the previous about 1850 level. So that's the little trade you can have there. However, that would indicate look for a breakdown of the S&P 500. So if we get any move to the upside in the S&P 500, that would be a short opportunity. So there's just something you keep an eye on here, and that's again why I didn't advance my stop on the S&P 500. If this actually the VIX were to reverse really quickly in the other direction, we could see the S&P 500 start to fall really quickly from where it's at right now. So that's just something to think about. Markets are not strong here. You don't want to be a buyer in any way, shape, or form. Be betting on the downside. If you've not been to the free website at PerfectStockAlert.com, it's right here. It's 100% free, and all we ask in return, please refer a friend. If you go over here to the market section, you can click here and watch the nightly market analysis videos, or you can move on down here to the chart notes. These are my personal notes. It'll tell you everything that I know about the market. They're updated every single night for U.S. markets as well as European and all 19 major markets that we track. So you can just go over here, click on the ones you want to view. You can see my chart notations as well as entry opportunities that I see, as well as stop loss limits that are advanced, so forth and so on. All right. God bless. Take care, and I'll see you in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.